Welcome back to Investing Talk Podcast,
Today we're looking at Robinhood Markets.
a company that really continues to be a major player in the fintech space.
Yeah.
We're going to try and cut through some of the noise today.
Exactly. We'll look at the financials, their strategy, and some of the speculative levers that are driving this recent surge.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we start looking at Robinhood's core financials, the growth is just impossible to ignore. They've really established themselves.
That's maybe the understatement of the year. If you look at the trailing 12 months, they've booked a remarkable revenue of $4.20 billion.
And that's a serious number. The speed at which they got to that scale, it outpaces so many of the legacy firms.
Right, firms that have been around for decades. It just shows how well they've captured, a whole new generation of investors.
But revenue is only half the story. The other, and I'd argue more important, half is how much of that they actually keep.
The profitability.
Exactly.
Yeah.
Over that same period, their net income hit $2.19 billion. This is where you really see the genius of their model.
So what does that work out to margin-wise?
It's a net margin of about 52%.
52%.
Yeah.
That's massive. If a traditional bank reported that, you'd think they found gold in the basement.
Right. It says so much about their efficiency, but also, the business model itself.
We should probably unpack that a bit. That margin doesn't just come from cutting costs. It's tied to their whole payment for order flow model, right?
It's intrinsically linked to it. The trades are free for the user, but they're getting paid by market makers for routing all those orders. It's a high margin, very consistent revenue stream.
And they run lean. They don't have thousands of physical branches or these huge, clunky IT systems like the old school brokerages.
That purely digital architecture makes every dollar of revenue just vastly more profitable.
Okay, so the efficiency is undeniable. But that brings us to the valuation. Their TTM EPS is $2.39, putting the PE ratio at around 49.42.
Mm-hmm.
And a lot of listeners might hear 49 times earnings and immediately ask, am I buying into a bubble here?
And that's a totally fair question, is why this stock is always being debated. If this were, say, a utility company, that PE would be insane.
But it's not.
It's not. It's a technology company in the finance space showing hypergrowth and that incredible 52% margin. Investors are paying a premium for the expected growth.
Right. You're betting on the story continuing, not just on what they're earning right now.
Exactly. And the foundation for that bet seems pretty solid. A market cap over $106 billion, a really healthy balance sheet with basically no escalating debt.
Plus, that strong cash flow gives them so much flexibility, they don't have to worry about dividend payouts.
Which means they can invest, they can acquire, they can buy back shares, whatever they need to do.
And we're already seeing that play out, right? We just saw the Q3 earnings from November.
We did, and the numbers just confirm that strength. Total net revenues of over $1.2 billion and a net income of $556 million.
And what's crucial is where that revenue is coming from.
It's transaction-based. The key drivers were options and cryptocurrencies.
High engagement stuff, the things that keep people coming back and trading.
Yes. It means their users are sticky and very, very active.
And like you said, they're using that cash. They aren't just sitting back. I'm thinking of the recent acquisitions.
Two big ones. First, trade PMR for $175 million. That's a clear move into wealth management technology.
So they're trying to attract more than just the casual trader.
That's what it looks like. And then the Bitstamp acquisition for $224 million. That one's arguably even bigger strategic.
Because it's their ticket overseas.
It's their fast pass into the European crypto markets where Bitstamp already has a really strong presence. It's huge.
Okay, switching gears a bit, we have to touch on the regulatory side. That's always the cloud hanging over this company.
Always. But management seems to be proactive. They just filed their Q3 broker-dealer order routing reports. It's a Rule 606A filing.
Which, for listeners, is all about transparency, right?
Yeah.
It's them showing exactly where they're sending orders.
And critically, if they're getting paid for it, by putting all that out there, they're trying to get ahead of the regulators to counter that narrative that PFOF is somehow shady or opaque.
So it's a move to keep things stable on that front.
I think so.
Now let's get into what I find is the most interesting part of this whole story right now. The insider activity. It feels like a real tug of war.
It really does, because on one hand, you saw this flurry of pretty big open market sales in November from senior execs and directors.
I saw that. Names like Stephen Quirk, Jonathan Rubinstein, And the Bayou Bot Living Trust sold a big chunk of shares, too.
And when the people who know the company best are selling, it definitely raises some eyebrows.
It looks bad on the surface. If things are so great, why are the insiders cashing out? But there's context here we have to talk about.
There is. A lot of these sales fall under pre-adopted 10b5-1 trading plans.
And that detail is so important.
It's critical. A 10b5-1 plan means the executives set up a selling schedule months in advance, probably for their own personal financial planning.
So it's not a reaction to some bad news they just got. It's more of a mechanical, pre-scheduled thing.
Exactly, and that softens the blow quite a bit. But the counterpoint is even stronger.
The institutional money.
The institutional sentiment is rock solid. Big players like Vanguard have updated their holdings, and it looks like large investors have been aggressively buying up shares all through 2025.
So they're basically buying what the insiders are selling.
It's accumulation versus distribution happening in real time. And the company itself is reinforcing this by buying back its own Class A shares.
Which is the ultimate signal, right? They're telling the market they think the stock is undervalued.
And Wall Street analysts seem to agree. You're seeing these major price target hikes. JMP raised their target to $170. Goldman Sachs raised theirs to $146.
So the professional consensus is firmly a buy.
They're definitely looking past the noise from those 10b5-1 sales.
Okay, what about the technicals? The stock chart itself has been on a wild ride.
Almost unbelievable momentum. It's been a classic bullish trend. Just higher lows and higher highs, consistently. The stock went from around $30 to an intraday high over $153.
That kind of move is, well, it's what you see from companies that are genuinely disrupting an industry.
It is. Right now, it looks like it's settling into a bit of a short-term trading range, maybe support around the $110 level with resistance up closer to $145.
So staying above that $110 mark is pretty crucial for the momentum to continue.
Very crucial. And speaking of momentum, we have a few institutional events coming up that could inject some volatility.
Right. First up is the ETF rebalancing window at the end of November.
And then not long after, we get the institutional 13F filings in mid-December.
And the 13Fs are basically the big reveal, where major funds have to disclose what they bought and sold in the last quarter.
It's a roadmap of institutional sentiment. If we see on December 17th that a bunch of new large funds have opened big positions, that's a huge tailwind.
It could provide a lot of liquidity and probably push the valuation even higher.
It's a major potential catalyst. And after that, all eyes are on the Q4 earnings release, which is scheduled for February 12th.
Expectations are going to be sky high after Q3.
The market's expecting more strong revenue growth, not just from trading, but also from net interest income.
And that's the money they make on customer cash balances, which in this rate environment it's a gold mine.
It's incredibly profitable, but analysts will be watching two things very closely.
Cost controls.
Cost controls to prove that 52% margin is sustainable, and two, trends in crypto volume. Crypto is the wild card, and any slowdown there would be a bad look.
Okay, so let's talk about the more speculative stuff, the potential game changers that are fueling these $170 price targets.
Right, the upside levers for the next 6 to 12 months. First is that international expansion. The rumor is that the Bitstamp integration is moving faster than anyone expected.
So it's not just about adding more crypto assets.
No, it's about getting a turnkey, regulatory compliant way into major European markets. Tapping into that global user base would be transformative.
Then there's the tech buzz, the AI platform.
Yeah, and we're not just talking about a better chatbot. The rumor is a platform launching in early 2026 with some seriously sophisticated tools.
Like what?
Think algorithmic trading features for the average user, personalized tax loss harvesting, complex options strategy simulators, things that would attract a much more sophisticated, higher net worth client.
So it's a move to shed that meme stock platform image.
Completely. And the third big rumor is a potential strategic partnership with a top-tier bank focused on payment and cash management.
That would be huge for credibility. It would de-risk the company in a big way.
It would be the ultimate validation of their model. But of course, we have to balance this with the risks.
The competitive pressure is still intense. The big legacy brokers are catching up on the zero commission model.
For sure. And regulatory scrutiny isn't going away. That PFOF model is always under a microscope. Any adverse ruling could seriously hit that 52% margin.
Still, you have to admit, management has been pretty agile. They seem to anticipate these challenges.
They do. Their operational resilience has been impressive so far.
So when you put it all together, the strong financials, the smart acquisitions, the institutional backing, and this whole pipeline of potential innovations, The long-term picture looks incredibly dynamic.
It really does. The core tension right now in the market seems to be this. Is the future of Robinhood tied to its current model, its reliance on PFOF, or will its long-term growth depend on, winning over European regulators and actually launching that rumored AI trading platform? That's the question that's going to decide if this stock hits $170 and keeps on going.